Welcome to Cheques and Balances. I'm Michael Vincent. This is James Blair. And this week, short-term debt affecting your chances of getting a mortgage.
So Michael, on this week's episode in Cheques and Balances, credit cards, Afterpay, people think about these products in terms of their short-term needs. I need this thing, whether it's a need or a want, maybe we'll get into a little bit later. Maybe they're even thinking about the interest implications.
Yeah.
But a lot of the time, they're not thinking about how it could impact their ability to get a mortgage, right?
Yeah, absolutely. And I think it's really important when we are talking about these short-term debt facilities to say that they do have some uses. Sometimes you do need a credit card. Not often you really need Afterpay, but it's probably a different story. But there are instances where this can be helpful, and it means that you can actually buy something you really need at a point where you don't have the money to do it. Let's pause on that because I know you're going to say the complete opposite, but that's fine. But look, what people often don't consider is the long-term implications of these debts and what it looks like when you are submitting a credit application to a bank and the way that this can really hinder you and reduce the amount that you can borrow.
Yeah, so when it comes to Afterpay, like for example, Mike, when he spills his bolognese he brings in to work on his white shirt, ends up buying his 8th white shirt for the month on Afterpay, I feel like that's not a need.
Yeah, look, absolutely, that's completely correct, right? And we'll put Afterpay aside in the way they advertise and the fact that it's kind of predatory and all of that sort of thing. So let's focus a little bit more on credit cards, GE cards, Q cards, those sorts of things, right?
So Mike, probably the first part there is talking about the limits.
Yeah.
Because you hear a lot of people go, yeah, I've got a credit card, but I'm really good with it. I make sure it's paid off every month. I've got a $10,000, $20,000 limit, but I never pay interest. What can the implications be to those people?
Yeah, so banks don't look at how much is owing on these facilities to a degree. Sometimes they do. If you've got an $80,000 credit card and you owe $50,000, yeah, they're probably going to look at how much is owing as well. However, with the limits, that is what they're looking at, not the amount you're owing. If I've got a $10,000 credit card and I only owe $1,000 on it, or even if I pay it off every month, the bank says, yeah, that's great, like you're good at managing your money now, but at any point in time, you can go out and rack up $10,000 worth of debt, and then you're going to have to pay for it. So what is the minimum repayment you have to make on that credit card? And then we factor that into the servicing.
So it's not as much to do with the, like, a credit card loan is at a higher interest rate, which has a higher potential multiple opposed to a home loan. It's still all coming back to the repayments and how that affects your servicing?
Yeah, it all boils down to what are your fixed expenses, and these are expenses that you can't change or reasonably can't change, and that is money that is taken away from you being able to service a mortgage. So if I've got a $10,000 credit card, most banks, not all but most banks, will look at that and say the minimum repayment on that is $400 a month, as if I had maxed it out and I'm just paying the minimum repayment on it. So that is $400 a month that goes from you having that free cash or that cash that's able to service a mortgage to, nope, that's taken up by that credit card limit.
I guess it's logical from the bank's perspective that they can draw down the facility, but also kind of crazy from I can see a client. Do they push back a lot on this, Mike, and go like, what are you talking about? I pay it off every month.
Yeah, we do. We see that from a couple ends of the spectrum there. Most people are pretty understanding about it because most people nowadays freely admit that they don't really know what the hell is going on with a mortgage application anyway. There's so many different rules now with CCCFA and that sort of stuff. So that's actually kind of stopped the pushback a little bit. Where we do see it is probably your private bank clients, where they're like, well, hang on, even if I did max this out, I could pay it back. What does it matter? However, it can still hinder them in terms of getting that approval.
Yeah. Do you see many scenarios where the outcome is a client needs to reduce their credit card limit, or does that not really happen?
It definitely does, and that is more common in the first home buyer space, or people who are going for that first investment property where you're really getting the numbers, they're tight numbers, and you're getting them to work. You might have to reduce some credit card limits. However, do not go out and cancel all of your credit cards before you speak to a mortgage broker. We can get conditional approvals where actually you don't have to close off the credit card straight away. We can get the bank to say, yep, we'll approve you for $800,000 of lending, but you have to reduce your credit card limit to, say, $5,000. Now, if you have different credit cards or different credit facilities, that actually gives us the option. So you might have a $10,000 credit card and a $10,000 GM Visa limit, but you might only owe $3,000 on the GM Visa. So what we might do instead of just closing one of those facilities off and shrinking the other one is saying, okay, cool, let's reduce the credit card to $2,000 and the GM Visa right down to $3,000. So you still have both of those facilities and you get the outcome that you want.
One more question, Mike, before we jump on to Afterpay. In the world where you have social media coming from lots of different countries, a question I get asked all the time is going, hey, isn't there a benefit to having a credit card with no limit because it gives me a credit score and it bumps up my credit score?
Yeah.
Does that help at all in New Zealand?
Look, I've covered this off a few times and I probably get asked this maybe 2-3 times a week. You'll see it on TV quite a bit, like if they're from America or the UK or somewhere overseas, I need to get a good credit score. I've got a credit card so I can get a credit score. That's not how it works in New Zealand. Overseas, your credit score goes from negative to neutral to positive, and you live and die by that credit score, right? In New Zealand, it goes from negative to neutral, but positive is still just neutral. It's either negative or neutral in New Zealand. You're not going to get approved a loan in New Zealand because your credit score is 400 or 900 or 1,000. That's not how it works in New Zealand. So there is no real need to have a credit card to build up a credit score. It's not going to help you getting a loan.
So in this episode of Checks and Balances Mythbusters, that myth has been busted.
Absolutely.
Mike, let's go on to Afterpay. So Afterpay, you're not paying interest on it, assuming you pay it off over a period of time. Mm-hmm. Let's say I've got an Afterpay facility and I'm paying back, I don't know, $100 a month.
Yeah.
How can that impact my mortgage?
Same as a credit facility, as a credit card facility. The limit of that account is what they're going to take the minimum repayments off, and that'll be your fixed expense. And the important thing to remember there is you might be going, well, yeah, okay, $400 a month seems like a lot, but how does that really make a difference? $400 for a mortgage per month is a lot because the loan term is 30 years. For a short-term credit facility like Afterpay, it's usually 4 installments, which is, 4 months or something like that, right? So you can just sort of think, well, hey, it's only a $10,000 limit. What's $10,000 more on the mortgage? Absolutely not. It's $400 a month, which can mean a lot more borrowing potential.
How about in the age of triple CFA, where let's say I don't have an Afterpay, balance owing, I don't have any facilities, but the bank looks and go, I have a history of paying Afterpay. Can you as the mortgage broker justify and go, hey, that was the old James, he's a new guy, he's different? Or do they look at that history of Afterpay in the past?
Oh, it just comes down to the limit. So long as you don't have any defaults, that's what's really going to hurt you. And that's why a lot of people, when they ask about credit cards, they go, well, really all you're going to do is it's going to cost you an interest maybe, and you might default, so don't bother taking it out. If you have a history of paying Afterpay, good for you. What does it matter for your mortgage application? What's the limit, and do we need to reduce it?
Awesome. Okay, before we wrap up, last question for those that are thinking about getting a mortgage and have Afterpay facilities that they're repaying or have large credit card limits, whatever it might be, what would you suggest they do?
Talk to your broker first before you go and close anything, unless it's Afterpay, and then just close the goddamn thing.
Great. Okay, well, we're going to save the rant for another week because we've gone over time. Please make sure to subscribe, give us a review. We'll catch you next week.
Cheers.